Session Outlook. My name is Alejandro Zambrano, Chief Market Analyst with TradeCaptain.com. In the next 600 seconds, we're going to take a look at the euro dollar. We're going to take a look at Bitcoin, gold, crude oil, and the DAX 30. Of course, we're going to talk about the non-farm payrolls numbers. They're going to be out in a few hours time. It should be in 4 hours and 25 minutes at 1:30 p.m. London time. We are hosting a live coverage of the non-farm payrolls here at Trade Captain, so make sure you join. You just need to come back to the same page at 1:30 p.m. London time, so that will be in 1 hour and 10 minutes. 4 hours and 10 minutes, and we're gonna take a look at some setups ahead of the non-farm payrolls. Now, before we look into the details of what's going on in the markets, I need to stress that trading financial markets unfortunately is risky. It's a genuine risk that we'll lose all of our invested money. As well, if you like this presentation, don't forget to hit the like button. Very simple, you click like down here if you like it. If you don't like it, you click on dislike. Very straightforward, and I hope you can help me by clicking on the like button. Okay, let's begin. And we're gonna begin by taking a look at the euro. So today is all about non-farm payrolls, and the market is anticipating the non-farm payrolls to print 192,000 new jobs. So 192,000 new created jobs in the US. That's sort of the average. Most economists, or I think the actual average is always 200 more or less. It sort of depends exactly on where we are in the economic cycle. But about 200 is usually the target, and that number is important, but it's not really that important. As long as we hit around 200, I think we'll be fine. If we hit 300, then yeah, obviously people are gonna get excited about the dollar. Hit 100, then people are gonna be a bit disappointed about the dollar. Now, I think the best way here, and that's the headline number. Now, the other thing, which is like I would easily say maybe two and a half times more important, is wage growth. Average hourly earnings has been increased last month with 2.7% year on year. That means that the average salary of people have increased with 2.7%. Now, if that is 2.8, 2.9, so higher than 2.7, then that is important for the dollar. And I think that is really the number I'm gonna be watching. And I think if we take out 119.20, now 119.16 on good numbers from the US, I think we'll take out the January low at that point. This is the January low. Take that level out, and then we can get down to maybe 118. And the way people are gonna work with this, most likely entries down here or slightly below this level, and then stop loss orders goes on the other side, maybe 120.33, and then maybe they lower this maybe to 120.13. So that is my sort of a good scenario if the US data is really good. Until that happens, I mean, there's no real, most of the time nothing is really going to happen ahead of the non-farm payrolls. Obviously though, if the numbers are bad, I think we can take out this level and this market could head to the upside eventually, so we have a correction of the last few days losses. Now technically in general the market is just bearish below 120.33, but I don't want to trade that. I was bearish up here, don't want to be bearish here just because we're just above support. However, take out 119.16 and I'm going to be bearish. Something that looks very similar is the price of gold. So gold here, if you look at the daily chart, we're just trading above major support level. We did have a very strong decline over the last few days, but then we've been around these levels for 1, 2, 3 days. Today is going to be the 4th day, and what's going to happen here is that if the numbers again are very good from the US, we'll probably take out 1,301. Now, I think the way to work with this is again maybe putting a limit order. So what I do is that if I want to trade the non-farm payrolls, I put a limit order in the market, but I don't do it now at 9:10 a.m. London time. I do it maybe a minute or so before the actual non-farm payrolls If I'm not doing a webinar or things like that, I'll wait for the last 30 seconds. Why? Because sometimes the price will spike ahead of the event, and you don't want to get triggered on a position ahead of the actual numbers. But otherwise, if we think about it, price is right now at 13.10. So what's going to cause price to break lower? Good note from payrolls, right? So that's why a limit order down here makes sense. Limit order down here, and it's only most likely going to come down if the note from payrolls are good. And then I let my position get hit, and then I quickly look at the numbers and say, and verify that the breakdown makes sense with the data that was out. If it doesn't make sense, I can close the position. And something as well I didn't say here when we started, I didn't mention the risks involved when trading. Click here for risk disclosure if you're new to trading, but I know most of you guys are not, but still read the risk disclosure statement. Okay, so that's sort of my plan. Now the question is, what happens if the numbers are bad then? Well, gold will most likely push up maybe to 13.24. The problem with that though is that there's so much resistance here. The same way as in the euro, there's a lot of resistance here. So I don't think people, gonna be like, all right, let's just buy dollars. We're gonna go all the way up to 125. It doesn't really work like that. So therefore, I'm not really bullish on the on gold or the euro, even if the numbers from the US are gonna be, even if they are soft. Now, what if they are soft? Well, one option here, which I like better, is dollar yen. What I like with dollar yen is that the market was heading to the upside, and I have been bullish since we took out these levels down here, moved all the way up, and I am still bullish above 108.87. However, and I said to my guys, if we go down here, I think traders are gonna be buying, and technically here, we're underwater with about 34 pip. And obviously, what if the numbers are soft? What if wage growth is 2.5, 2.6, note from payrolls is close to 100? Well, most likely we're going to spike below here and trade lower. We'll be stopped down of the long. At the same time though, this is an appealing setup to be short. Why? Because you have a little low here at 108.54, but sort of the next major low is down here at 107.79. And that's a good little potential profit here. So on the break to the downside, could potentially decline with 106 pip, whereas stop goes on the other side. That's 55 pip risk. So the risk reward ratios here are really good for a bearish position. There are more markets we can watch and more markets we are going to watch. So if you want to watch how we take a look at the markets live, then join me here at the same channel at 1:15 p.m. London time. What we're gonna do now, we're gonna go back to the normal sort of routine we have here. Now this is Bitcoin, and I've been very clear that buying down here at 8,904 is where I want to be working with. The idea was to buy down here and book profits around maybe 10,800 for a potential return of almost 19%. Since then, the market is up with, we're up with about 8-9% more or less on this. And if you didn't buy, I think there's not too much to do. I mean, I think we will, as we take out this high, it should most likely cause the market to push higher. The way I operate here is that, I buy on these good setups, and then I buy on these breakouts for a little bit more. So that's something that is possible now, to add more to the winner. That's something I like to do. So yeah, Bitcoin up to the high here. I think it's gonna head to the upside. Obviously, it's not about Bitcoin just in isolation. IOTA, which I talked about yesterday in the technical session. I'm long myself IOTA. I'm long Ethereum Classic as well, and yeah, Ethereum Classic, Litecoin, and I'm long IOTA. IOTA here took out 2.24. When I did the update yesterday, it's at 2.6. I bought pretty much here. and we took out that high, April high. I think this is what's going to happen with Bitcoin. Took out the high, pushed to the upside. Here's crude oil, and crude oil is holding up well. You know, you should never ever underestimate the trend and the different ways of trading, of course, but I prefer going with the trend. And this market, you know, moved up, pushed back to the buy zone, and is up again. I think if it goes down, I think traders are going to buy. Take out 66.82, we can go to the downside. Now this is difficult with the non-farm payroll. I don't know exactly how it's going to influence, because sometimes crude oil takes its cue from the dollar. So if the dollar gains a lot, you know, it's up against the yen, it's up against the pound, it's up against the euro, it's up against the Aussie, New Zealand, CAD, and then crude oil softens as well. Sometimes the people say, well, look, very good non-farm payrolls. People are going to be driving their big cars more often, and they buy crude on the back of that. So it's difficult to say exactly how it's going to influence. I think keep an eye on the dollar, keep an eye on what's going on with stock markets, because if stock markets tank because, say, non-farm payroll, the average hourly earnings are really high and strong, then they're going to say, well, you know, the economy is gonna suffer because the Federal Reserve are gonna increase interest rates, and that's gonna make it more difficult for people with a mortgage and people with credit cards and debt in general. So watch stocks and watch the dollar, and at the end of the day, just watch this level. That level tells you if people are buyers. Below it, most likely they're gonna be sellers. Gold we already discussed. Here's the DAX. So the DAX a few days ago, in fact, we said look to buy down here. The market moved up and moved as high as to the high up here, which is 12,838. That's a return of 3.7%. And then yesterday I said if we move back down to the low, I think traders are gonna buy. Again, sort of similar trend following techniques that I use for all the other markets as well. When we take out a high, the market is usually just going to target the next high, which is up here. And if it seems a little bit unlikely, like it's unlikely that this market is going to rally all the way up, so it's like 8%, 7.5%, just like that, then I target interesting lows. So then actual next interesting low that we can target with is up here. So move down a bit and to the buy zone again. We did not go to the whole breakout level that we talked about yesterday, but we moved down and the market has then bounced. Here, if one is not long from here or on the break, I think you just need to wait. I think you missed out on this one. And that's it. Okay, let me see if we have any questions. Today at 1:15 p.m. London time, again, we're going to watch the markets. I'm going to be using a Bloomberg terminal, so I'm going to get the data out as it's being shared across the world. And then I'm going to interpret the data, share my view on it. You just need to come back to this page at 1:30 p.m. London time. Sorry, 1:15 p.m. London time. As well, if you want to know more about my trading, then we do have a webinar coming up on the 10th of May. I'm going to talk about my top trade ideas for May 2018, and you also want to check this out. I'm myself very enthusiastic, and I'm going to join myself, Nathan, which is our analyst that just joined us here. He publishes content every morning here. He's going to join us, and Nathan used to work for used to manage money professionally for about 4 years, and he's going to talk a bit about how to deal with trading discipline. So he's going to talk about his experience. He's a very methodical man. He was managing money again for 4 years, and it's a bit different, you know, when you trade with your own money, where you can just buy, sell whatever you want, and if you have a loss, and you have a wife, then she'd be upset. And if you have a husband, then maybe your husband is going to be upset. And then, you know, as long as you don't lose the house, you'll be okay. It's a bit different when you're managing money for someone professionally and when you're trading really big sizes. So you want to join in for this. It's free to join. You know, when you register here, you become a member of Trade Captain Premium. And when you are a member of Trade Captain Premium, you easily sign up from one webinar to another. And this is going to be in 11 days on the 15th of May at 1:30 p.m. London time. If you register and you can't make it because you're at the office at that time or out with the dogs, or maybe it's a bad time for you because you happen to be based in Australia or something like that, where the time zones don't add up, then when you register, we do send the video out afterwards. So make sure to sign up for this webinar. Okay, let's see if we have any questions. If we don't, we're gonna wrap things up. Okay, so no questions. Yeah, so just click on like, please, and don't forget to subscribe. I'm gonna show you something really interesting. I was telling you guys, most people, in fact, almost everybody that watches this video, they like it. Obviously, people don't come back if they don't like it, right? But we have one guy, and I'm going to show you how it works, that doesn't like the videos, and he has made it a task to come in and dislike most of our videos. And I know that because it's coming from one country. And let me show you how that looks like. So we have 38 dislikes from one country, and so it's obviously just one person. Everybody, you know, the likes are there without any doubt, but you can see it's just this guy that likes to click on dislike. And when it comes down to likes, we have a ton of people, and I really appreciate it, from the UK, US, Poland, Greece. You can see here, these are the likes. So I need your help. It's been continuing for too long. So if you like this stuff, click on the like button. If you don't like it, click on dislike. Cheers guys, have a great day, and I'll see you guys hopefully in a few hours for the NFP video and live coverage. Thank you.